Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar has extended gains in the overnight session. After a late rebound last week, the market is now looking towards a resistance of 71.85. It is assessed, as before, that the challenge towards 72 cents should find a bearish ambush and therefore could actually see the market again retreat and tumble away from the region of 71.85 to 72.40 and look back towards the region of 71.25 to 70.60. From a technical implication, the RSI is somewhat showing some weakness. The MACD is holding presently a bull signal, but nevertheless, from the previous rejection and also back here in early February, the rejection does give some hope that the bears are preparing an ambush if we take a challenge back to 72 cents. Well, it would seem after the fourth attempt at 113.70 in the euro, the market has actually rejected it, but not backed away as much as previously seen from these last three dojis, also known as a tri-star. A tri-star pattern keeps the negative outlook in motion after the overnight advance was respected at 113.70. But the point I'd like to make is a break above here could see an impulse and prepare yourself to start getting short towards 114.45.65, because I believe the market will stage a very significant move away from there and look back towards 112.50 or 111.60. Well, it would seem that yen weakness came back into play overnight after President Trump has delayed his own deadline to increase tariffs on Chinese goods, as his administration continues a month-long effort to persuade Beijing to make significant structural changes to its economy that has so far provided elusiveness in terms of there hasn't really been any news out of these meetings. President Trump overnight, in a round of tweets, said he would delay a Friday deadline to increase tariffs on 200 billion in Chinese imports, citing substantial progress during a week of trade talks in Washington between America and Chinese officials. President Trump is also set to hold a second summit meeting with North Korean leader Kim Jong-un on Wednesday and Thursday. At present, we do have and do take a note is that Jerome Powell is soon to testify in Washington, and from the round of talks could actually last for 2 days. It is assessed that Jerome Powell will give testimony on the economic outlook and monetary policy plans, which is scheduled, as I say, later today and Wednesday. So this could also give some significant moves in the US dollar. I'm not completely convinced on the break of 110.95, and therefore resistance is capped around 111.60. As long as we maintain underneath there, then I'm happy to say that the call is back towards 109.70. And this move wasn't as dynamic, and if it was a bullish break, we should have gone a lot higher, but it didn't continue overnight. But from a technical point, the RSI is remaining above the midway point, along with the marriage to the MACD, which is giving some hope for the bulls to possibly get to 111.60. But let's see how it plays out today. The pound gradually increased overnight, and from the close this morning has actually looked toward, now gives hope of a challenge, that is, towards 131.25 to 131.90. The pound found its charm over the fact that some announcement from British Prime Minister Theresa May that significant vote would take place on the 12th of March. The British newspaper Telegraph recently learned that the Brexit will be delayed for up to 2 months under plans being considered by Theresa May to extend Article 50. The recent lack of momentum, although the overnight advance has now put the technicals, as I say, in a slightly better shape to take the challenge up, is getting overbought. And last time we got to this region, we did actually drop away, but we did have this pattern of a descending triangle. Unlike before when we got to the overbought, the market was very much in a whipsaw manner. Let's reassess from 131.90, as a rejection from 131.90 could see a move back towards 130.30. Looking at the gold, well, the market pretty much traded sideways and respectively held within the range of 25.33 after posting a 25.32 overnight. Parameters. From the market outlook though, I do expect to see any weakness to fall back towards 18, and the channel at this stage is at 1,312 to be a buy zone. The technicals though are a little bit flat, so we could still see a drop back towards the bottom side of the range with minor at 25, but demand is expected from 18. Rounding up with oil, well, overnight the market plummeted by 3% after President Trump popped his head out of the woods, so known as the Bear Trump, tweeted and said in his round of tweets, which was surprising because he's been silent. He's been rather quiet, or been silent for 2 months. Overnight, President Trump said he urged OPEC to relax on production cuts, even as the US shale boom undermines OPEC's effectiveness in rising oil prices. Trump's tweet also said that oil prices are getting too high. OPEC, please relax and take it easy. The world cannot take a price hike. Fragile. Trump has been unfavorable of the OPEC in the past, putting pressure on the cartel as it sought a crude oil production cut agreement at the last OPEC meeting. So let's see how the market plays out. I do expect to see 54.95 to 55.25 support hold. We did get down to a low overnight of 55.12, I believe. A rebound from this level would give further hope for a rechange back to $58, but do keep your stops tight because under 54.95 exposes a region back to 51.90, so keep that in mind. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the new day ahead.